Ethereum's price action and ETF flows paint a mixed picture right now. Data from Sosa Value via CoinCentral show you a spot Ethereum ETF saw net outflow of $167.41 million on Thursday, the fourth straight day of withdrawals. For example, Fidelity's FETH fund saw the largest single outflow, with $216.68 million exiting on Thursday. Bitwise's ETHW fund also saw significant redemptions, about $45.66 million, while BlackRock's ETH was the lone bright spot with a net inflow of $148.8 million. In other words, except for BlackRock, all major ETFs saw money coming out. This marked the fourth day in a row of ETF outflows for ETH. Sosa Value's data cited by CoinCentral traces the streak back to August 29th. That day saw $164.64 million outflow. It continued with $135.37 million on September 2nd and $38.24 million on September 3rd, culminating in the $167 million outflow on Sept. 4. These drains reversed the inflows that had characterized late summer. In sum, about $505 million has left ETH ETFs over 4 days. Of course, US spot ETHs still hold a large asset base, so this pullback in flows may just be profit-taking or reallocation rather than a wholesale exodus. But the trend is clear. Short-term ETF sentiment has turned weak, putting downward pressure on price. The chart above visualizes these ETF flows. Green bars equals inflows. Red bars equals outflows, along with ETH price. Notice the cluster of large red bars at the far right. This is the 4-day outflow streak from August 29th through September 4th. Meanwhile, the white line ETH price shows how Ethereum was essentially stalled around the $4,275 mark during this period. In other words, despite hundreds of millions pulled from ETFs, ETH has not crashed. It has merely stalled and retraced slightly. Indeed, Ethereum's price reaction has been relatively muted. CoinCentral notes that ETH closed at $4,275 on Thursday, even after the outflows. And the only visible effect was a modest slip about 1.4% down during that session. In practical terms, ETH has held its key pivot near $4,200 to $4,300. This suggests the market may be absorbing ETF sell pressure to some extent. However, the fact that the outflows coincided with that price dip does imply some short-term fatigue. Momentum indicators have rolled over from their extremes and traders are cautious. On the technical side, Ethereum is indeed bumping into familiar barriers. Late August saw ETH reach a new high $4,956 on August 24th, but it hasn't cleared the round $5,000 level, a classic psychological resistance. As FX Street observes, key areas of interest for traders include ETH's record high of $4,956 and its psychological $5,000 level. At the moment, ETH is bouncing around its 50-day and 100-day moving averages, roughly $4,053 and $3,580. Per that analysis, the RSI is around the mid-50s, moderate demand, but not overbought. In short, the chart is bullish and the medium-term uptrend intact, but short-term momentum is cooling. A decisive move back above $5,000 would likely reignite bullish conviction, whereas failure there, especially if macro conditions sour, could let ETH drift back toward major EMAs. This tug-of-war is happening against a backdrop of a huge rally in Ethereum this year. Over roughly the last 5 months, ETH has risen roughly 2.5x from its prior lows. Analysts point out that Ethereum's 150% surge since April 2025 has been driven largely by ETF flows and institutional demand. In fact, some reports highlight that Ethereum's ETF market has attracted $18.4 billion in inflows since July 2025, including a record $726.6 million in a single day. This wave of capital has powered ETH from the $1.80 to 2.0K area in early 2025 up toward the high $4,000 area this summer. Put simply, the combination of spot ETF hype and adoption momentum has fueled a powerful uptrend. ETH is simply doing what the bulls expected for the last half year. Behind the headline ETF numbers, one of the biggest stories is the growth of institutional and corporate treasuries stacking ETH on the books. Data from CoinGlass shows digital asset treasuries have been voracious buyers. Since April, these entities like publicly traded firms have accumulated roughly 4.1 million ETH, $17.6 billion. It's about 3.4% of the entire ETH supply, with Bitmine alone holding approximately 1.3%. By comparison, US spot ETH ETFs hold about 5.4% of supply, closing parenthesis. In other words, corporate treasuries are now a material demand source nearly as big as all ETFs combined. And their buying is sticky. They plan to hold long-term. Notable players include Bitmine, Sharplink Gaming, and the Ether Machine. Bitmine Tom Lee's firm remains the king. As of mid-August, it had scooped over 106,000 hits $. For 7 OM in one go, bringing its total to roughly 1.3 million ETH. Sharplink Gaming has also raised capital and held around 837,000 ETH as of last report. The Ether machine is a newcomer but has moved quickly. After a $654 million funding round, it added 150,000 ETH to its treasury and now owns nearly 500,000 ETH, worth $2.5 billion, making it the third largest ETH treasury behind Bitmine and Sharplink. These firms are continuing to buy even during the ETF outflow period. It's highlighted by CoinCentral. For example, Ether machine bought 15,000 ETH on August 10th anniversary and 10.6K on August 4th, all of which signals that large players are not backing down even as ETF flows dip. Indeed, some analysts note that legacy institutions are bullish too. Standard Chartered recently lifted its 2025 ETH price target to $7,500 from $4,000 in light of this frenzy. So we have a bifurcated picture on one hand. Massive structural demand is piling into ETH. Treasury companies record ETF inflows earlier this summer, arguing for continued upside. On the other hand, the sudden pullback in ETF flows and the resulting stall in price highlight a short-term shift in sentiment. If retail or speculators lose interest for now, ETF flows can quickly turn negative, placing pressure on price. However, the magnitude of recent outflows, $to 5 OM, small relative to the overall market. ETH's market cap is in the trillions and to the billions in on-chain purchases. It's possible that these corporate treasuries will simply absorb ETF selling, or that the outflows are largely rotation rather than panic. Crucially, the market is staring at macro catalysts that could sway the balance. U.S. non-farm payrolls, SEP5 report, and the Fed's September 17th meeting are imminent. If the jobs report is weak, for example, approximately 75K jobs added, it will strengthen the Fed cut narrative. Markets are already pricing in an 85 to 90% chance of a rate cut in September. And Fed futures imply roughly a 50 BP cut by year-end. A soft NFP would likely cement these expectations, causing yields to fall, the dollar to ease, and risk appetite to return. In that scenario, we could see a reversal of the recent ETF outflows. Lower borrowing costs and a softer dollar would make crypto more attractive, potentially drawing inflows back into ETH and other risk assets. Some strategists have indeed suggested that a labor market stumble could catalyze the next leg of this crypto rally. Conversely, if jobs come in stronger than expected, the Fed might hold off on cutting. That outcome, higher for longer rates, could keep risk assets subdued. Under those conditions, the current outflow trend could continue or deepen as investors rotate back into bonds or cash. Crypto rallies of 2025 have largely depended on the Fed pivot narrative. Also, any hawkish surprise would be an obvious macro headwind. The FX Street report implicitly warns of this. It notes traders should exercise caution ahead of the Fed decision and economic data, since a hawkish tilt could renew risk-off pressures. Technically, the immediate landscape reflects this uncertainty. ETH is in a near-term consolidation after a steep run, a classic flag, or pennant pattern. It is supported by the ascending trend line tested recently around $4,200. As long as that holds, the bias remains up. Break it, and we may see a slide toward $3,500, $3,800. The 100-day IMA next support. Momentum indicators offer mixed signals. RSI is neutral, but poking toward overbought on smaller timeframes. An MACD just gave a tentative sell signal not easily cited, but suggested by the slight dip on September 4th. Bulls will be watching for higher highs above $4,500 and clear holds over $4,000. Bears want any breach of those EMAs for confirmation of weakness. Investor psychology also plays a role. The $4,000 mark was decisively broken this year. Now the next big milestone is $5,000, and beyond that, the old ATH near $4,860. FX Street explicitly calls $5,000 a psychological barrier. What happens if ETH gets there? Some traders will be aggressively taking profits at round numbers. On the flip side, smashing through $5,000 would likely trigger FOMO and algorithmic buys, propelling ETH toward the $10,000 before BTC hits $200,000 targets that some analysts talk about. In fact, a few models now assume Ethereum can sustain a 2.5x 3x multiple on Bitcoin, which would put it in the tens of thousands if BTC runs to new highs. Of course, that's a bullish scenario. Current caution is simply that many investors would prefer confirmation of the Fed pivot or sustained inflows before re-upping bullish bets at these lofty levels. In the final analysis, Ethereum's near-term trajectory will likely hinge on which narrative wins out. The institutional adoption case remains very strong. Record ETF and corporate flows, major network upgrades like EIP 4844, and ongoing demand from DeFi and tokenization projects support higher prices over time. For example, reliable sources note that ETH's ETF inflows and Treasury buys have pushed many metrics realized cap, market share, etc. to new highs, painting a bullish long-term picture. On the other hand, the macro headwinds and sentiment shift case is real. Rates are still historically high, and any hawkish Fed commentary could trigger crypto sell-offs. The recent outflows illustrate how quickly sentiment can cool once traders sense a pause. For now, Ethereum is in a kind of guarded standstill. It's holding key support, but not decisively breaking higher. Volume has also thinned out, indicating indecision. Savvy traders will watch daily candle closes around $4,200, $4,500. If ETH breaks convincingly above $4,500, it will signal a resumption of the bull market fueled by the structural demand we've described. If instead it gives way below $4,200, it could retest $4,000 or lower, validating the concern over outflows. The catalyst likely to break this impasse is the U.S. economic data. All eyes on the Friday jobs report. Importantly, even if there is a pullback, Ethereum's long-term foundations are strong. The network's usage metrics and fee generation have been robust. And new entrants, even whales swapping Bitcoin into ETH, are adding liquidity. In fact, CoinMarketCap reported a mysterious $4 billion plus BTC gives ETH rotation by a whale in late August, underscoring that big capital is willing to chase ETH against Bitcoin. If the Fed ultimately does ease and ETFs resume inflows, we could see those data-driven buyers step in wherever ETF sellers stepped out. In summary, the Ethereum market is in a bit of a tug-of-war. The so-valued data-driven outflows show that traders are taking a breather after a huge rally. Yet at the same time, the on-chain charts and corporate balance sheets show serious accumulation by institutional players. The immediate outcome hinges on macro events. If U.S. labor data disappoint and the Fed turns dovish, odds favor a reversal of the ETF outflows, and Ethereum could resurge toward fresh highs. If not, we should expect a period of consolidation or even a pullback back toward major support levels as ETF sentiment remains a headwind. Smart investors and traders will be parsing the data flows, on-chain signals, and macro prints to gauge which scenario plays out, regardless. The interplay between institutional conviction and ETF macro sentiment will dominate the ETH narrative in the coming days.